from Enam Holdings, Investment Director. Sridhar, great to have you back. Let's really just dive in. There are a few different factors at play right now and a few loose cannons, so to speak. In the near term, I just want to get a picture from you first, in case there are any key concerns that you feel one should be monitoring. Of course, the fact that we started to see a little bit of outflows on the back of what's happening on the global front, as well as not completely out of the woods with regards to some regional lockdowns that have started to kick in once again.
Yeah, so as you mentioned, near term, those are the real concerns. I was in around Nagpur over the weekend, and even 60 to 80 kilometers outside Nagpur, all restaurants were shut, all shopping malls were shut. This is pre-lockdown, which is 15th, which is today is from when the lockdown, or yesterday was when the lockdown was supposed to start. And so obviously these are going to have economic impacts. So there is already some bit of impact in and around clusters where the viruses have gone up. That could have a short-term impact. And of course, the other thing is one has to keep a watch on inflation, not only in India, even on what's happening to the US, bond yields and inflation. So if you ask me, those are the near-term concerns.
Okay. And in terms of your own outlook, Sridhar, does that remain bullish? And in terms of timelines as well, when you're looking at opportunities right now, are you expecting that massive rebound to come in as early as later this year, or given possibly some choppiness, are you looking at a slightly broader time frame when you're thinking of perhaps pockets like an infrastructure, for example?
No, so actually, if you see, we remain quite bullish on the market. So as long as, the liquidity from the US market, which is the mother of all markets, and the stimulus, and we just saw 1.9 trillion stimulus, there's a talk of another stimulus for infrastructure, education. As long as that money is continuing to pour, it will find its way into various asset classes. And one of the most happening asset class right now is commodities and emerging markets. And we think that this asset class will continue to do well. And India will disproportionately benefit from this asset allocation, because we've seen some issues with Latin America, especially when it comes to corporate governance and the government interference. So people will want to invest in countries which have a stable democracy, and the opportunity to invest in stock-specific ideas are much more, say, in India. So we are quite bullish on emerging markets in general, and in particularly, we think that Indian markets will continue to do well as long as US continues this easy monetary policy. We don't see this ending, at least in 2021. Maybe this is the wall of worry we have to cross next year.
Okay, Sridhar, you just highlighted commodities, and where within commodities are you finding comfort even now? Because the commodity rally has had its share in the sun. It's not a new discovered theme. We all know what's been happening to metal prices, crude, agri-commodities, and across the gamut, so to speak. Would you say that a large part of the gains are already behind us, or would you say that the commodity rally has more legs to go?
So, Aisha, as far as stocks are concerned, even if these prices maintain and you don't assume, or you assume that there's no further rise in commodity prices, the earnings impact on some of these companies is quite, exponential, because the way the whole operating leverage plays in and the way the profitability grows. So I don't think anybody is penciling right now. Even the current prices, we are all assuming that, the average prices for next year will be at least, say, 15% lower than where it is today. If for whatever reason these commodity prices were to, sustain here, we could see massive earnings upgrade for all commodities, be it steel, be it, ferrous, and even for domestic cyclicals. Look at cement prices. So we are quite positive on the entire basket. Obviously, the starting point last year, sometime in, say, May, June, was really at absurd levels. They were at 0.2, 0.3 book, and they were quite a no-brainer at that point. As you said, some of them have rallied. We still believe that we could continue with this rally for some more time, because most countries are trying to expand their balance sheets, and large part of the spending is going into infra. If you saw the budget for India, the finance minister has significantly increased the allocation for capex. So that's the same thing is happening across the world, and that will result in more spending as far as infra is concerned, results in higher demand for commodities.
But is there valuation comfort amongst metals?
Yeah, so if you assume these prices, then the valuation look very cheap right now. So the valuation comfort is not there only if you are assuming that the commodity prices are going to fall about 10 to 15% from here. And that's not a base case right now.
Right. What happens to financials then? And in particular, I want to talk about banks, Sridhar, because they are the last ones to actually join in the party up until Feb 26 and fall as well as much with the markets. What's the big concern here when it comes to banks?
So actually, we are quite positive on financials also. And sometime in November, we turned positive even on the PSU bank. So I'll give you the case for both of them. The concern for financials came from the fact that RBI in its, initial report sort of indicated that the increased NPA due to the virus-related NPAs would be about 400 to 500 basis points. And there was a general assumption that the PSUs will have a very high number and the private sector will be substantially lesser. As it's turning out that number, even for PSUs and for private sector banks, is substantially lesser, even adjusted for, the NPAs which are not yet reported, the restructured numbers. You take all of that together, it's well under 200 basis points. So I think one of the concerns was that there wasn't enough data and people assumed the worst. As it's turning out, it isn't as bad, and the economy has bounced back fairly well. Of course, the caveat is, as we are seeing right now, there are a second round of lockdowns which are coming up. How those play out is something which time will tell. And so we still remain positive on the private sector banks because they have demonstrated that they have been able to weather the storm quite well. As far as the PSUs are concerned, one of the metrics which we were looking at was pre-provision profit to market cap. And many of these PSUs were trading at, less than 1 time. Just to give a context, market cap of private sector banks trade anywhere around 10 to 15 times their pre-provision profit. And our assumption here is that over the last 4-5 years, PSU banks have provided almost 2 to 3% of their assets as provision. So basically, the provisions have been 2 to 3% for almost last 3 to 4 years. We do see normalization in this, which is the first part of normalization will come in 21-22, and we'll see the credit cost falling from here on. Even 100 basis points credit cost fall will have a massive impact as far as earnings is concerned. So that's how we are looking at this. We are positive more on the banks, not on the NBFCs. Yes, there are some plays on NBFCs also, but the risk reward is so favorable for banks that I don't need to look at anything outside this.
How are you participating in this entire PSU reboot, Sridhar? Lots of ways. Some are liking metal, some are liking defense PSUs, some are liking the ones which are on the block for a strategic sale. What is the best way to pick your spots?
The best way is to buy a basket. You really don't know. So obviously the names for which the privatization is going to happen is already out. We know that a lot many more will be announced based on what we heard from the finance minister on the budget speech, and later many announcements have been made. So if I'm a retail investor, I would buy a PSU mutual fund. As an institutional investor, we do stock picking and we buy stocks within the basket where we think that there is a business case itself. Because you also have to assume that privatization doesn't happen, then what? So you're basically trying to buy companies which have business models on their own, and valuations are anyway stacked well in favor of PSU banks. But our assumption is that the government is pushed to the wall. There isn't enough divestment opportunities available. In fact, we have done a calculation that if the government were to divest all the PSUs up to, say, 50%, the amount that they can recover is only around, say, 1,20,000 crores. the number would have changed a little bit here and there based on the market price movement. And look at the PSU divestment targets, about 1,75,000 crores. So they're basically pushed to the wall. This whole process of selling small portions of PSUs has run its course, and it's the only way out for the government is to privatize. And we've seen in the past also that when the government is pushed to the wall, they do end up coming up with the reform measures, and same is the case this time. We are quite confident that this will go through. If you look at the building blocks for BPCL, the sale of Numaligarh refinery, the sale of the treasury stock, it all indicates that the process is on. We are keeping our fingers crossed.
A lot of new IPOs are coming, and some of them are exciting. You've got a small finance business. You've got Nazara, which is a technology company. You've got across the board IPOs which are coming. The exciting bit, Sridhar, is that a lot of internet companies are now going public. Do you like that space?
So some of the valuations for the new IPOs look quite stretched. Especially in some of the technology names that you mentioned, there are no comparable plays, but they end up competing with global majors. So I would actually wait on the sideline and see how they perform. I'm not in a hurry to jump in just because it is a fad right now. There are so many opportunities. If you look at comparables of companies which had IPOs and companies in the similar sector which are trading in the market with 20 or 30-year history, there is a significant discount. So today in the market, there is a fashion for IPOs, and they seem to be, there's a huge pop-up post IPO. We are not in a hurry to, just get into some of these just because, there's a short-term gain. So we are staying away unless there's something really serious and something worth investing.
Okay. What about, when you're talking about value plays as well, Sridhar, does that also include some of the beaten down pockets, maybe in the likes of, even hospitality, tourism, pockets like that, or, select finds in the broader markets? Would you also be venturing there?
So broadly, when we say, when we've looked at, value as an opportunity which will outperform growth, one of the points that we've been looking at is that, is there a kicker for the value stock to move up from here? In case of PSU, there's a privatization kicker, there's a dividend kicker. In many of the cases, and in case of PSU banks, there's a huge earnings growth kicker. So if we don't find some event which will help them to improve their earnings, then we are not just playing just for the sake of value. I mean, that could easily be a value trap. I'm not saying that, some people like it, they may play hospitality and some of the other, beaten down sectors because of the COVID-related issues. But we are looking at, sectors and stocks which have some earnings growth kicker because of certain events. So it's very difficult to paint a broad brush on all value, but there is a case for value right now. Even globally, if you see, even in the US, value has outperformed in the last 3-4 months.
Absolutely. And what would you then be also doing with some of the pockets like IT, for example, or some of the other areas that have really run up and are sitting on, premium valuations? Do they still remain, though, select names there, leaders that would be in the basket regardless, or would you also be seeing a further rotation?
So, our preference right now is domestic cyclicals. Outside the domestic cyclical story, the other theme that we've been playing is this China plus one story, which includes, things like electronics manufacturing, chemicals, some pharmaceuticals. So anything in that basket, where we see strong earnings growth because of, one, the incentives that the government is giving, and two, because huge potential because of export opportunities because in some of these sectors. IT also is seeing huge demand growth. we're very selective in that. We still have some issues as far as whether these sort of spending will continue over the next few years. We'll wait and watch. But that's the broad, sectors that we are looking at outside the domestic cyclicals.
Okay. Sridhar, you mentioned that you don't see interest rates moving up before the next year. But when is it that the markets would actually begin to price in? Or are they already are? Is that what we're seeing, these aberrations play out in the markets?
Yeah, so Aisha, we are going to see volatile markets. If you look at any data metrics, you look at earnings or earnings growth or GDP growth, tax to GDP, obviously we are subpar. And we are not going to reach, the trajectory level if we remove last year out of it, even possibly in 2 years' time. So there are issues. It is not as if, the economy and global markets don't have issues as far as valuations and earnings growth is concerned. Because of low interest rates and liquidity, the valuation multiple that the market tends to give is far higher. Also, what we are seeing is that the big are getting bigger and the small are suffering. We think this trend could continue over the next few years. Unfortunately or fortunately, most of the listed space is on the big space, and they seem to be benefiting from this transition that is happening. And as a result, we are seeing strong earnings growth. We've already seen in the last few quarters that companies have surprised as far as earnings is concerned. May not be on the top line, but on the EBITDA and the bottom line. We think this will continue, and as we get into next year, we'll start to see surprises even on the top line. So inflation is a worry. I don't see RBI's, from at least the commentaries, looks like they are not in a hurry to increase interest rates either in India or globally. And as long as those signals continue, I think you can remain positive on the markets.
Sure. Where do you think the next trigger really, Sridhar, for the markets are going to come in from? I mean, the earnings which are going to kickstart next month, are they not already in the price, or are you expecting some surprises there?
No, I think a lot of the earnings will be in the price, but the kicker is we just got 1.9 trillion in the US. Now, where is that going to flow? Large part of it may come into the markets, either in the US markets or in ETFs or in emerging markets or any other asset class. So I think the flow will continue to be strong. As you mentioned, that the next 2 quarters, we are going to see very strong earnings. So the markets will, there's going to be less bad news as far as earnings is concerned over the next 2 quarters because there's a base effect. Apart from, fresh lockdowns, which can have an impact on the market, at this stage, it looks like the market will continue to inch up. Obviously, there'll be volatility as we are seeing in the last, few days, and which I think is healthy. If the market goes one way, it's not healthy anyway. But we see the markets continue to move up over the course of the year, unless we see some, major COVID-related issues.
Is the leadership in pharma getting challenged? When we came out of the COVID crisis, it was pharma all the way.
No, so I think the leadership will get challenged, but it doesn't mean that pharma companies may not do. As I mentioned, that we're quite bullish on the China plus one strategy, and there are many companies in the pharma space which are benefiting from that. Markets are slaves of earnings. So if the earnings are going to be strong, it does not matter whether you're in pharma, IT, or you're in some cyclical or whichever, sector. If earnings are good and they continue to surprise, the markets, then stocks will continue to perform. So as I mentioned, that was one of the cases even for value, that we were looking at value stocks which have some, earnings trigger or some trigger. Unless that is there, yes, in a right tide, all the boats will move up. But to sustain that, you need earnings growth. So I think pharma will also continue to do well in companies where there is strong earnings visibility and growth. And where there are challenges, they may, struggle, or they may move on a sideways for some time.
Sridhar, one consensus, or I would say chorus and consensus trade was bet on telecom, bet on data growth. While data growth is evident, a Reliance or a Bharti, Vodafone, I'm not even getting there, they both are struggling. Bharti is nowhere close to its 52-week high. Reliance is also nowhere close to its 52-week high. Why is that happening?
Yeah.
Do you think markets are somewhat disappointed that data growth is happening, but there is no pricing power?
Yeah. So this is a sector that hasn't worked for us. We were quite bullish. It worked last year in the initial phase, and then it faded off. And I would say that one of the reasons for it not working is that there was an assumption that there's going to be a strong ARPU growth, because even now we have $2 ARPUs for all the benefits that we are getting and for all the data that we are consuming. The sector, if you take the entire telecom revenues, it was around 2 lakh crores, say 3 years back. It's around 1,60,000 crores today. So even if we go back to where we were 3 years back, that's 40,000 crores incremental EBITDA for the sector. But that hasn't really played out, and that was really our call that over the next we would have seen ARPU growth, which will help EBITDA growth for some of these companies. The competitive intensity is still very strong, but we think that at some point this has to ebb, and we will see ARPU growth come back. It's a patience game. So we remain positive on telecom. I mean, there aren't too many telecom plays anyway. So as you mentioned, there are only one or two. So we remain positive on those.
So Sridhar, if somebody wants to get rich, and if somebody says, look, I've seen Sridhar Shivram's great interview in ET Now, how can I get rich? How would you respond to that?
I would say buy a PSU ETF or a PSU mutual fund. If BPCL gets done, the entire basket gets re-rated. Now it's a question of patience. There's a risk involved. So that's what I would say. Easiest way, or buy any mutual fund for that matter. Most funds have exposure to PSUs and other growth stocks. It's a patience game. So Nikunj, you've seen the markets for so many years. If you stay invested and give time, returns will come.
Well, I always say this, that gains are made in money not by timing it, but by buy and hold. Looking at data that Bajaj Finance at the beginning of the decade was at 75 rupees, now it's at 5,000. Outstanding business, always looked expensive, but it's been just one of those glorious decades for Bajaj Finance, HDFC Bank, and many others. And this decade also will give these outside gainers, provided you have conviction and patience to stick to them. Okay,
Yep,
Sridhar,
okay.
really appreciate your time.